Shares of Joby Aviation are up 30% on Wednesday after the company announced that they have finalized a $250 million investment from Toyota. Now, Toyota actually gets kind of a sweetheart deal here. They're buying shares for about $5.03 per share. But this does a couple of things for Joby. One, it gives them the confidence of partnering with a company like Toyota. They are actually helping them become a little bit better manufacturer. So I think that's just fundamentally good to have partners like that when you're in this early stage of an investment like Joby. The other thing is Joby is the kind of company that needs ongoing funding. So they actually need a high stock price and a high valuation to be able to continue to raise those funds as they're building their aircraft, or they're building out manufacturing, and they're building out their business model. The higher the stock price is, the less dilution that we have with those capital raises. It sounds a little bit crazy, but a highly valued company actually kind of begets more high value in the future. So let's go through exactly what we know today. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's first look at the stock move. This is Joby Aviation, now trading at $8.85 per share. The high for the day, a little over $9 per share. So it was a little over a 30% gain for the day. Really nice day for shareholders. I'm going to start with the press release. The press release, Joby announces the closing of a $250 million investment from Toyota. Toyota actually has another $250 million tranche that they're going to complete hopefully later this year. I believe that's what the timing of that is. But it was a little bit uncertain when this one specifically was going to close. So nice to see that this deal got closed, especially with the stocks, especially with the market falling a little bit earlier this year. I think investors got a little bit nervous that, hey, maybe this $500 million that was supposed to come from Toyota wasn't actually going to arrive. So we get about half that. I'll get to how that impacts their balance sheet in just a second. Then we can go to the details. This is the SEC filing, and there's a couple of filings here, but this actually shows the total value that Toyota has in Joby. So they are a 15.3% holder of Joby's shares outstanding. That's a really big holder. It's a pretty sizable investment, about $1 billion investment in total value for Toyota. So a lot riding on this. And this acquisition right here, acquisition date 5/22. So this actually happened last week. The number of shares acquired was 49,701,790 at $5.03 per share. So that's the acquisition from Toyota. I mentioned that they got a bit of a sweetheart deal, $5.03 per share. Today, those shares are worth almost $4 per share, more than that. So almost a 75-80% gain for Toyota in just about a week or so. So pretty good deal for them. But how exactly does this play into Joby's strategy and what they're going to be doing long term? The first thing I want to look at is the balance sheet and their cash flow. So in blue, what you have is the total cash and short-term investment. So this goes back to the March 2025 quarter, $812.5 million worth of cash on the balance sheet. So if we just add $250 million to that, but look at the free cash flow. They are burning almost $500 million worth of cash on an ongoing basis. So they're really in that development phase. They're getting FAA certification. They're flying their aircraft. They're building more aircraft, going to build about 10 or a dozen aircraft this year. But they're not making any money. They're not selling any of them. They're not doing their air taxi business. So no money is really coming in the door. So you've got to continue funding those operations, and you want to have 1 to 2 years worth of runway, because if you don't, then the market starts to get really scared. You start to go, okay, how are they going to raise that next fund? This answers that question. This gives them basically 2 years worth of runway at the current burn rate. Now they are going to raise another $250 million from Toyota. So that should be coming in. I wouldn't be surprised if we see more capital raises, especially as the stock price goes up. Wouldn't be a bad idea for Joby to raise another $250 to $500 million and just give yourself another year worth of runway to build out your business and get to a sustainable point if they can get there in the next 3 or 4 years. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. And then we get to how in the world does Joby make money? How do they get to that sustainable point that we all want as long-term investors? And that's where comments from Paul Sciarra really laid the groundwork for what the potential business models are and what their potential cash impact are going to be for Joby as we look forward. So I've highlighted all these quotes, but there's 3 segments and 3 ways that they can move forward with the business model. The first is to have direct sales for defense applications and for businesses who want to own and run their own aircraft. So you build aircraft, and you sell them at a profit. And that's ultimately how you're going to fund your operations, your capital expenditures, all the things that go into running a business. That's a pretty straightforward path, but it doesn't necessarily mean the most long-term value for the company, but it is the best near-term cash, as he says. And then he says, second, we're going to have markets where we do not plan on operating the air taxi service directly. Instead, we may work with partners to deliver that service. We see this model applying primarily outside of the US. So Japan partnered with Toyota, and that could involve joint ventures or sales or leases, things like that. So the economics probably going to be pretty similar to direct sales, but they are going to be involved in those operations. And then the third business model is the direct-to-consumer path. This is the air taxi business that I think a lot of investors, and myself included, have really thought is the future of Joby. That's where they are going to be owning and operate those air taxis services themselves. That's going to be more capital intensive, but potentially higher margin in the future. So how do you bridge that gap, building out that capital infrastructure, building all those aircraft you're going to actually own? Is there some sort of financing structure that you can use with a company like AirCap? That's a possibility, but that's going to require more capital than Joby has today. So those are kind of the business models, and that's the bridge that the company's going to have to get through over the next 3 to 5 years to get to sustainability. This at least helps answer some of those questions, gives another $250 million. You got about 2 years worth of runway. That's a solid position as they get to FAA approvals, get to finishing out their manufacturing facility, and then start to actually churn out 1+ aircraft per month. That's what they're going to be doing in 2025, and then they'll ramp that up probably in 2026. So incremental positive news, obviously a huge reaction from the market. I don't think this is necessarily a game changer for Joby, but kind of answers some of those short-term questions. And if the stock continues to go up, that could actually provide fuel to actually get to a sustainable point for the business, because this is only about 2 years worth of runway. It's likely the company's going to need more capital, even on top of what they have coming from Joby. So a higher stock price could actually be something of a self-fulfilling prophecy. The high stock price allows you to raise more capital, which allows you to build out this air taxi business model even quicker. So interesting things from Joby today. As a shareholder, this is one that I think is an incremental positive, but wouldn't be surprised to see this pop today kind of pull back, because I think this is a little bit overblown for a capital raise that we've known has been coming for quite a while. But let me know what you think about the future of electric vertical takeoff and landing aircraft, about these potential business models from Joby. Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.